JB here. Hope everyone's doing outstanding. Monday, August 25th, 9:08 a.m. Talk really quick about the market. Some names I'm looking at go from there. SP futures in the red, down about 0.3%. Back to gap down mornings, or at least red mornings. Going into Friday, 5 sessions in a row to the downside. Nasdaq down, I think 6 or 7, and then Powell was able to drop the mic. I wouldn't even call it drop the mic, but was able to alleviate concerns that he would be hawkish. Spun it enough to give the bulls something to cheer about. Maybe take the current administration's stance on him like a little less that back and forth. Maybe take a pause on that, and who knows? But the big thing is it's like he took he tried to find a way to appease the bulls, the current administration, the bulls, and not become hawkish by focusing on the jobs, right? And that's been the big issue. And he cited some stuff that the deportation immigration situation has caused the amount of available worker, the pool to decline, and so it kind of mitigates any loss in job creation. So it kind of like distorts that data. Who knows? I mean, it's bullish for now. It's the good thing is there's 3 more weeks till the Fed meeting, or 3.5 weeks, and 23 days or what have you. And there's some time to see maybe he was able to walk rates down, right? That would be the ideal scenario. Be able to talk the rates down as opposed to actually doing the actual rate cutting. The odds of a September rate cut actually are down today, even with a Friday's dovish spin, down to like 83% probability. I would think it's like 100% probability, but who knows? The concern would be, and I expected more chatter over the weekend, is that the Fed gets in a situation where it stimulates the economy, that inflation continues to rise, and that would be, and maybe the economy still struggles, right? So we'll see what happens there. All right, so that's kind of the overall the picture here this week. I talk about the trading ranges. I'm somewhat cautious heading into this week, not for any other reason, not because because I'm a bear or what have you, but it seems like that 645, 646. We closed at all-time highs on Friday on the SPY. It just seems like maybe we'll have some chop here this week. NVIDIA's stealing the show this week, just like Powell stole the show last week, Wednesday. And again, it's another one of those earnings that it's so hyped up, and actually it feels like NVIDIA is not as hyped up as it was like the previous couple quarters, uh, that it's almost becomes a sell the news, even if they have a monster quarter, which they will. And he'll talk about the insane demand, supply not even able to keep up with demand until that dynamic shifts. That trend will continue over the next couple of quarters. So that's that. We also get weekly jobless claims Thursday. Will steal a little bit more attention because of what Powell was talking about on Friday. And then we have the second revision on second quarter GDP, which backward-looking number, but hey, you never know. After the revisions on the jobs report, every data piece that gets revised, there definitely could offer up some surprises. Yeah, it's like another one of those weeks. Same with last week. I was open to adding some put hedges. I'll be in the similar boat here. I'm not saying I'm not optimistic. I do think if there's any opportunities, it'll probably be I'm hoping we'll be on the small cap side. Nice little data piece here from MarketWatch this morning, showing about forward earnings estimates going up for the small caps, and then the weaker U.S. dollar might help too. So and lower rates. So you couple that all together, I think that bodes well for small caps. But we'll see. I think I did 628, 646 on the SPY. That's this week's range. Last week's range worked out great. And then boom, we had that big move to the end of the day on Friday. So we'll see how this week's range plays out. Also, the amount of stocks trading over there, 200-day moving average on the S&P is at 2025 highs, but not anywhere near the 80 handles we were at. 80% of the stocks trading over there, 200-day moving average, back in the spring of 2024 and September 2024. So maybe that's a change. All right, so that's kind of overall markets. Now, just quick on some individual names, and Zoom was the one I wasn't really looking at it on the watch list, but it was gapping higher. It's one of those names I've watched over the years, especially with COVID. I'm trying to remember the other name they acquired. But I was very big in Teladoc back in the day. So, Zoom was kind of, virtual situation that really got adopted in COVID. So you saw that big boom and then the fall from grace, right? But then it's almost like the stock still has the semblances of post-COVID that people think at some point this company is not going to be relevant anymore. It's going to get supplanted or whatever the case. And that hasn't been what's been happening. And this last quarter was their biggest revenue growth in nearly 3 years. The company has $8 billion in cash, $24 billion market cap, and maybe they're on the cusp of rekindling growth and opening a bigger total addressable market. I just like the story here. Again, fundamentally sound. So there's some levers that maybe they could pull. And then you look at the chart, and it's like there's like a divisive opinions out there from analysts. Some have underperform ratings or sell or neutral, and then there's some that have outperform and bullish, and some have $66 price target, and some have 110, 125. So of course I'm on the latter side. I think it heads higher. 85 is the big spot here. Back in May, if it gets over 85, I think it heads to 92. I have those 86 strikes, and funny enough, I get those calls. Stocks at $79, and even getting those 79s, the stock was up nearly 10%. Those calls, if you had bought them on Thursday into earnings, were in the red. So you got paid for nothing for that huge move on earnings. And then even as it was melting higher, then it's over 80. My calls were barely gaining premium. And then boom, finally there was a spike in the afternoon. Closed them out for nearly 100% to cover cost. I'll hold the rest. Hopefully it gets 85 plus in the next day or two would be the ideal scenario. If it starts doing that, I'll look for some later dated strikes. It's over its 50 and 200-day moving average, so that bodes well. On the flip side, if it does find pressure, maybe it gets back under $82. I'll just close the rest so to cover the profits and revisit. All right, so that's Zoom. And then Pool. Finally back in Pool. Pool's a great story, right? I mean, the issue, it's had declining growth over the last couple of years because of rising rates. Rising rates are not good for people who are looking to get a new addition to their home to add value and create some kind of space for a vacation space. But now if we're in somewhat of a lower rate environment, or at least yields going down, you have to think that bodes well. Not only that, they have this recurring revenue maintenance situation, right? So they maintain pools. So because of, as they continue to get more additions of pools, right, then their maintenance contract revenue goes up as well, or at least that's a constant, right? It's a where even if there is a slowdown in the amount of pools that their install base, it still provides a revenue stream for them and profit. And I think that I don't know if it's 30% margins. They have a stock buyback, free, throwing off $400 to $500 million in cash every quarter, and then you have the backdrop of Buffett, right? 3 straight additions to their holdings. This last addition was like 170% more of their stake, right? So more than doubled what they were holding. At some point, this breaks out. If you look at the monthly chart, it's like I wouldn't call it a flat line, but it's been chopping between the 280 to like 350 for the last 3 years. It got up to 345 after its earnings, dipped back over its, the 200-day moving average right there at 324.61. It's sitting here at 324.59 here in the pre-market. I finally found a strike that had a decent spread. I was able to get some calls on Friday. I think it trades north to 345 in the coming weeks. I'll look to close them out on the way up. I don't know if I'll have a stop. The liquidity is tough, right? Every time I talk about Pool, the issue is when you get in a position that's not that liquid on the option side, you have to have an exit strategy, right? Especially if the proverbial poop hits the fan, the market has some kind of catalyst that pulls it, some crazy Trump post or tweet or something, right? So you have to have an exit strategy, and when you have an illiquid name, it makes it riskier, right? It's a riskier entry. It's already risky. It's an option. You have time decay, all those other factors, but you also have the factor of liquidity. So those look, if you look at the open interest, I don't have it up on right now, but I mean, it looks the best strike in regards to liquidity. And yeah, so if you look at the contracts, I don't even know if to add up the open interest, but those strikes have 600, pretty much 600 open interest. You go to any other strike, the most they have is 160. Yeah, so it's pretty much 200 to 300% more open interest on that strike than any other strike that's open. So hopefully the market makers heed that and provide liquidity if there's an opportunity, that need to get out. But for now, I'm just going to hold them, be patient. All right, that's Pool. Serve Robotics. If the small caps start to go, and you take a look this morning, I mean, they were in the green while the rest of the market futures were in the red, but now it's pretty much neck and neck with the S&P down here at 0.3%. If those find some footing, Serve, I'm still looking for some strikes, maybe towards the end of the year, or maybe even to 2026. 975, the big spot there. And then some other names here, Line, huge move on Friday, up nearly 6%. Another name that benefits if, rates go down. People are more apt to do some discretionary spending that they have to raise debt, to create debt for, right? Not going to pay cash to get your teeth straightened or what have you. So It's up here 149, 149.75. That's a key spot, right? So back after its earnings gap down, it hit that and just couldn't break through. Did it again on Friday. It gets over 149.75, trades into 50s for any substantial period of time today. I'll look to get some more strikes, maybe September 165s. Those look interesting. Still have those 155s. Those are freebies. Back in the green. So I'll just continue to hold those a week, almost as like a lotto. That's a line, but really like that one. And, just like Pool has a buyback, active stock buyback program. I think they have $500 million active. Align Technology, similar, right? 200 million. They just announced that they're actively buying back, and who knows how much more. So really like that one. All right, quick on other names. IIPR, solid day on Friday as well, up 5%, back over its multi-week highs. My October strike still over 100%, still holding freebies on those. $57, that's a big spot. I might look for some more strikes there. It's only, I would call it ticking time bomb. Only matter of time before there's another update in the marijuana space in regards to declass or reclassifying. Other names, Lulu. Lulu was in the 208s, 209s in the over-hour session. I was kicking myself. But now it's back doing what it's doing, back in the red. I'm not sure if I'll revisit, but I'll have my eyes there because I think once it catches some buyers, I think it trades north of 220. Disappointing on Wayfair and Restoration Hardware, right? It's those names, right? Restoration Hardware up 11%, and it's like that Sopranos episode or whatever. It's like every time you try and get me out, you pull me back in. And here it is, Restoration Hardware. It's like every time I look at it, it's calling my name, right? Pulls me in, it's up 11%. I'm like, gosh, if you had trade that on Thursday into Friday, those calls would be, a couple thousand percent at minimum. And then boom, right at the end of the day, if you got calls into this week, you get news, Trump's looking at tariffs on furniture. Just sometimes disappointing, frustrating to try and trade names using, due diligence, right? Fundamentals, sector trends, all the things going on in the market. You try and look at just probably, maybe do boots on the ground research, and you go into some of their showrooms if there's any located by you. You're like, okay, traffic looks up. This looks like a great one. And then all it takes is one little tweet, and then all that is out the window because it doesn't mean anything anymore, right? So I don't know if I'll trade it here for a bounce, but interesting to watch. Hey, maybe there's a positive development, right? So we don't know that. And, I always talk about the RH CEO. He's someone who's just going to push a button and say, we're going to buy back 25% of our outstanding shares, and they'll raise debt to do it and then cause a squeeze. So always one to watch there. I think that's it. Look at some of the Asian names this morning, right? I mean, nice rally overnight. And then you look at BABA reports at the end of the week. That's always one. It's like, that one's been stuck. It's like, when is BABA going to go on its tear? And I've been talking about Baidu, kind of like removing that one from my watch list only because it's been such a waste of time over the last couple of years. And maybe the same with BABA. But it's ironic enough, too. This morning, there's some article about real estate in China, taking off, the big boom. That's the next wave. And it's like, oh, where's Evergrande, right? Who remembers the Evergrande, the first default of China debt ever? And that was supposed to take down all the markets. And then, last week or whatever, it's like, oh, they filed bankruptcy, they're done. And here we are back to square one. It's just funny, all these headwinds that people talk about that are supposed to be the next leg for the big, the Great Recession. And then it's just dismissed, the debt, U.S. debt credit rating downgrade. World War III. Who remembers World War III with Iran? I mean, it seems like all these events are years ago, but they're a couple months ago. And here's the market should close all-time highs. But again, I'm very cautious today. I don't know if I'll do too much. I put in a watch list. I'll be out of the chat room. I mean, I'll be in, but I just be busy. So between 10:30 and 4, I'm going to be in and out. If you need if I don't respond to you in the chat room, if you have a question, send me a DM. I'll respond right away. And that's it, folks. Let's have a great day and let's have a great week. I'll be back. Rock and roll.